The following is a presentation of TFNN. The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman singing for Larry Pesavento. Larry will be back tomorrow. My pleasure to be here. Usually I do my show 11 o'clock till noon Eastern Time. That's the Tiger Technicians Hour. And my service here at TFNN is the opening call, daily newsletter. Well, let's get to the numbers. The E-mini is, as you can see right here, if you're looking at my charts, on the left is the daily, in the middle is the weekly, on the right is the 120-minute chart. Let me show you what I'm looking at. This high-level consolidation is going to be very important for a couple of reasons. At the high, the all-time high was 2417.75, and that was made on the 25th of May. And we're very real close. We're at 2415 right now, 2415.50. If there is a punch into the 2422 area, then there's no question that we have to consider that, because this is the technique that I use, that the stochastic, which is 93% and not pulling back into the 87% area, as long as it holds steady in this area, that is good action. That's really what you want to see if you are looking positively at the market. If you're looking on the short side, you want to see this pulling back very sharply, and it has to happen very soon. The weekly chart is still very strong. Price-wise, the technicals are really not confirming the price point of almost at all-time highs. 2417.75 was the all-time high. So what we're looking at is a situation where, within the context of the technicals being somewhat weaker, certainly the MACD hasn't crossed positive. The stochastics at 88%, that is good. But it was much higher previously back in the early part of the year. So it's starting to show a little bit of wear and tear, and I'm going to be watching this closely. The 120-minute chart is really our short-term bias, and that bias says that within this arch formation that becomes a cup formation, we've got to look at that 2417.75 area very closely. The stochastic has rallied very sharply in the 120-minute chart. The MACD has crossed positively, and there is some price movement, but you would have, I would have expected that the 2419 to 2422 level would have been hit already. So we're going to be watching this, and we've got time, because we'll go until 10 o'clock, and we'll be able to see exactly what happens during the actual trading day. Now let's get to the nitty-gritties of things like the dollar. The dollar struggling here. It's making this arch formation. In the daily chart, a little mini arch right there. In the weekly chart, a rather large arch. It looks more like the uppercase A that goes straight up and then comes down. This is a little bit bumpy on the way down, but the technicals are very poor. The 120-minute chart made a peak F in the Chapman wave, and that's now testing an uptrend line. And just make it real simple, at 97.13, down 10 cents. If the dollar currency index if it goes under 96.80, the key support level, that's just not going to be very good for the dollar. Monthly chart has made a peak D and is pulling back. What do I mean by peak D? In the Chapman wave methodology, what we look for is, from an obvious low bar, we merely count each successively higher peak. When you get to the fourth highest peak, other things can happen. I label them alphabetically on the upside with uppercase, can go to D, can even go to E, F, and G. On the way down, it's lowercase. And on the way up, the peaks have a greater emphasis in the Chapman wave methodology than they do on the way down. Actually, the implication is different, although the application is exactly the same. So here, let's just look at the gold, because gold, you would expect with the dollar pulling back, gold is up Well, it's up $3 at 1268.6. That's good. I'm anticipating that there will be a leg D. This is one of the smallest peak A, peak B, peak C moves to the upside where the technical is pretty good. And that's saying that the gold has not yet got the veracity, doesn't have this impetus, this strong momentum to the upside. Yes, it's walking the 9-period moving average on the left side. This is the daily chart. See, it's walking that 9-period moving average. I'd love to see that. The MACD is up, but not as strong as it was when it went to the high back at 1300 in April. And at the same time, the stochastic is at 88%. That is good action. So you'll see the weekly chart has this V-shaped pattern, went to the new high, recovery high back in the week of the 21st at 1300.7, pulls back sharply to the 1217 level. Now it's trading at 1268. Nice rally above the 9-period moving average, but the MACD is just kind of okay, and the stochastic still quite weak. So I don't have technical confirmation about this rally, and I'm suspecting that gold it's going to need more time and more a building of strength to really break out. And the only way you can see that if it goes to the 1287, 1292 level by next week. If it does that, all of a sudden gold's on fire, and you will see the GDX start to move a lot better. And at this point, the GDX is just stuck in a range. Now, a couple of things are going on. The weekly chart of the GDX, the gold miners ETF, it really is just stuck between, it's at 2259. It needs to break above 24 to show upside power. And if it closes under 2089 is the level. Let's just say it closes under 20 in the next week. That's going to be negative action. So let's look at the EUR-USD. That's the euro-dollar currency pair. Once again, Basil Chapman sitting in for Larry Pesavento. Made a peak E, holding the 9-period moving average. Actually looking quite good, especially since the dollar is showing some weakness. And the weekly chart has really broken out. I suspect it is going to go to a D. I have a target for the euro-dollar currency pair of 1.12989, the high of the week of November the 11th. And the support so far is very good. Oh, I'd say yesterday's low of 1.1108. The 120-minute chart is in leg C, and it should go higher. So that's the euro-dollar. Let's see the USD JPY. That's the currency pair. The currency pair right now is making that H pattern. I drew it in the other day when I was doing Larry's show. I said there's a good chance that we're going to see the straight down comes down. That's the back of the lowercase h, the declining line, and then there's the arch formation that makes the H itself. So, and now we're looking at the USD JPY weekly chart, and that says it got repelled at that resistance. So we're looking at that. Let me just look at crude oil before we go to a break. And crude oil is very weak. It's at 48.36. It made a peak D. I can now put in a down arrow. Crude oil should be pulling back. And with the dollar weak, you would expect crude oil to be rallying. I just suspect that there is such a plethora of oil that it's not going to work out for oil to go back to the 52 level very quickly. More likely it's going to test the 47s, and that's the way I'm looking at it. We'll be back. We'll look at bonds when we get back and some of the other indices. Basil Chapman sitting in for Larry Pesavento. This is Trade What You See. Basil Chapman sitting in. I'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman sitting in for Larry Pesavento. Larry will be back tomorrow. We're looking at the TLT, which is the Lehman 20-year Treasury Bond ETF. It's trading at 124.01, down 8 cents. It's in my work, it's gone to this leg C. I'm thinking it's still going to go to a leg D. My anticipation was that if the bonds actually push into the 125.31, in other words, if it breaks that 124.98 high of the 18th of April and holds there, I'd love it to do not in a D, but I'd like to do it in leg C. I'd like the C to continue. That'll be very positive. It'll be the first really good sign we've had for bonds in a long time, because the weekly chart has this lowercase h, the schematic that I drew a long time ago, template, has the lowercase h going to a lowercase m. And that can go on for a long time. I mean, look at this in the crude oil chart. If you look at the crude oil chart, look, there's that lowercase h going to a lowercase m. I'm anticipating that there's a good chance that the crude oil in this particular pattern could in fact test and even break the low that was made in February of 2016 of 38.76 sometime this summer. I'm just saying that that's the pattern that you would expect if it's going to continue to be weak. So if I'm looking at the TLT, and let's just go to bonds themselves right now, because the bonds are down just 230 seconds. That's gone to a leg C, and if there's a new high today, by the end of the day, if it goes over 153.5, all of a sudden you're looking at this leg C extending. That's kind of the action that I'd like to see. Now, what my belief has been for a little while, that when bonds really break out, and for the bonds that have to go to the 155s, and they're 153 and 830 seconds right now, that would say to me, two things are happening. I don't know if I can get to it right now. I can't get to it here. All right, move this away. Going to close this out, close workspace. Yes to all. Put in the new workspace, and I'll show you something very interesting. Look, in the chart that I have that I show subscribers almost every week, it's my triple yield chart. It shows the 30-year, that's the TYX, that's the white chart right here, the white bar chart right there. The 10-year T-note yield is the brown one, and the 5-year T-note yield is the cyan, light blue colored one. You can see that it's within a trading band, but making lower lows. Now, the pattern that we're looking at suggests that the Fed might feel under pressure and that they won't be raising rates if this continues. So that it means if the bonds and the TLT break out to the levels I discussed, 125.5 in the TLT, 155.5 in the T-bonds, then all of a sudden you're going to see these yields going down. But they've been here. Look at this. Go this horizontal line. You can take it anywhere you want. You can see that all the yields where they are right now, right there, they've been there many times over the past few years. So it's really not a big deal. What will be a big deal is if the Fed feels that it can't raise rates because of conditions, economic conditions. That we won't know for a little while. But my thinking is, here we go. They're going to the Dow, and let me just get you the Dow Daily. I've got two patterns for the Dow Daily. Exactly the same charts. One has the MACD and stochastic, and stochastic is at 91% good, but just turning down right here. Stochastic, the MACD, moving average convergence divergence, is good, but in the chart that I have right here, you can see that this pattern since the cup formation has really struggled to break out above 21,169. This is going to be the opportunity this week. Last week was a really important week for the test of the 12-week consolidation in the Dow. It's really been a 12-week consolidation in the S&P, even though it's snuck to slightly higher highs, all-time highs. But it really has been in that consolidation. Dow hasn't made a new high. So this is going to be very important. How does the Dow handle any buying pressure coming in today? Because, fund managers like to use the end of the month, beginning of the month, as when new money comes in to put to work. So it hasn't yet worked in the Dow 30. And I consider the Dow 30 to be in a perfect position. It might have just one or two too many financials, but really the mix of the Dow is the best it's been for years. And it's saying there's been some kind of a rotation, a sideways consolidation within a trading band between basically the 2100 level and the 20,000, say 20,000, call it 400 level. It went a little lower and a little higher, but let's call it that's been the range. So there's going to be a test. Now, within the context of patterns, there's a fighting pattern between this large cup, which has really struggled to break above 21,120, and the arch formation that's forming here, the large arch formation. Very often we see these sine wave patterns where you get the cup, then you get the arch, then you get the cup again, then the arch, and at some point they break the sideways range pattern. So I'm thinking that if bonds go much higher, and if you see the VIX index, the volatility index, VIX.X, the VIX index trading at 10.07, going back to the nines, where every time it's gone to the nines, there's been a little bit of a pop-up, but unless it really spirals higher into the high 11s, then the 12s, and the 13s, this is just buying pressure or support pressure for the market. So we're looking at 10.07. It's suggesting that there's still some buying, but look, the stochastic's down to the low at 6.64. This is the area that it starts to rally from. It can stay there for a little bit, but this is the area that you've got to watch closely. And this time, the MACD is much higher than it was. And that, in a sense, is a positive divergence. So we're going to be watching this real closely. I'll just make it simple. The pattern that I'm looking at suggests that the Dow will start to weaken, and then you should see the SMH as the semiconductor index, the QQQ, the index 100 power shares trading vehicle, and the XLK, that's the S&P Select Select Tech sector. Then you should see them pull back. But until you get the QQQ and the NDX 100, this is the futures, is trading at a new all-time high. As we speak, up 25 at 5,817. I've got it in a leg F, but it doesn't seem to want to even notice that in the daily, leg D in the weekly, and leg C, very bullish in the monthly. So if you put this all together, it's saying high tech, and I went through 50 of the Investors Business Daily, top 50, over the weekend, the daily, weekly, monthlies. Monthlies are still very strong, but I have to tell you, those weeklies are getting to D, E's, and F. Most of the E's and F's are very extended, certainly in the dailies. I think we're getting really close to some kind of a pullback in that in the sector of the leaders. That's the Index 100. That's the select tech stocks. And even if you look at Microsoft, I mean, this is from the 2000s. Look at this, all-time high at 70.61, up 20 cents pre-market. And so far, the monthly has broken the resistance. So to actually pull back, I'm thinking you have to have bad news that affects the market and affects the stocks. And you have to have the VIX rallying, and you've got to have bonds going much higher. So we'll see what happens by the end of the day. Basil Chapman sitting in for Larry Pesavento. We'll be back. When we get back, the market will be opening, and we'll go to the nitty-gritties of actual performance. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. Larry will be back tomorrow. So the Dow, let's see. We'll go through the numbers. Actually, you know what? Let's do this. I'll do it with the charts. So remember, on the left is the daily. On the right is, in the middle is the weekly. And on the right is the monthly. And yeah. So what we're looking at is the Dow right now is up 15. It's still within this containment area. If it breaks above 21,112, it goes to that leg D. My thinking here is that it will not go to a new high in this particular move if we start to see later on in the day the semi start to pull back, the Q start to pull back, etc. Well, we'll see what happens. So the parameters we were watching, 20,980 is really key support on the short-term Dow daily chart. And as I say, 21,113 breaks out, starts leg D. Let's go to the S&P. SPX.X right this moment is up 2.38, made a high of 2418.71 cash the 25th. I've got that as a G/A. MACD is good, not as good as it used to be back in the 16th of May, but it's still pretty darn good. And the stochastic at 94% is really strong, but you're not getting follow through yet on the upside. Days young, anything can happen. We'll be watching this real closely. I can just tell you, if the Dow goes to 21,250 in the next 3, 4, 5 days, I just have to say, you know what? Energizer Bunny, this is unstoppable. We're going to go even higher, but I don't think that's the case. Meantime, back at the ranch, S&P has 2405 as the 9-period moving average support. It has to hold over the next 3 to 5 days, and a break above 2422 is really very good action. The weekly chart, leg E, it'll be a peak E if there's no new high coming up this week. Monthly chart, leg D, it's still very positive, but leg D says, okay, yellow light is starting to flash, at least shorter term. So let's go to the QQQs. They must have made a new high. Yep, they did, just gapped up, went to 141.84. Now, this is going to be very important. 96% in the stochastic. That is really good action. There is a pattern here. There are three patterns that I'm looking at that are suggesting that we've got to be very, very watchful at this particular point in the QQQ series, and I'll explain why. This right shoulder of the stochastic, we've seen this pattern before, and within the context of repeated formations, once you've concluded this very long 96 or higher, 95, 96, 97% flat stochastic and broken down, the next move up often fails, and it makes an arch formation and it breaks down. But at 96%, you would have to see the Qs, the NDX Power Shares Trust Series, really break down and go well under the 140.23 9-period exponential moving average. Probably you'd have to break 139. I don't know what's going to do that, because earnings have come out. They all seem to be good. So it's going to have to be either something affects the market very negatively, and it could be the tax that all of a sudden the market's afraid that there won't be any tax reform. Whatever it is, so far it hasn't been earnings, but you just need one of the semiconductors to come out, the very last ones to come out with something negative, and that'll be the trigger that I'm looking for to continue the downside, to reverse the upside move and turn it down. So it's going to be a process. It can't be, unless it's a one-day phenomenon, that's going to be a move where the Dow is down like 400 points as it was over a week ago. 2 weeks ago, I don't see what's going to do that right now. So the jury is out right at this moment in terms of the Qs. The XLK trading right now, all-time high at 56.81. Leg C in the monthly, that's very positive. Leg E in the weekly, that says, you got to be a little careful. And I've drawn a pattern that I'm expecting, some kind of a pullback, and then lower lows and lower highs is the pattern that I'm expecting in the XLK, the S&P Select Tech Spider Fund. Could be totally wrong. If it goes to 57.50, I just have to say, you know what? This is the acceleration move that I was hoping would not happen now, and it could be a wild ride into the summer. I'd prefer that didn't happen. Preferring doesn't mean to say that it doesn't do a thing. So what we're looking at here is that the SMHs are up 22%, 22 cents at 86.33. Dailies leg E, weekly is G/C, monthly is C, very positive. But I'm looking at a number of little factors here. As I said, in the Qs, there were three technical indicators that were suggesting to me that market was getting tired, and that's in the SMHs. It's saying that yes, it could be getting tired, but you need to see price action prove that. And at 86.22, unless the SMHs in the next week start to trade well under 84, you can go chop to the side. That's all I can say about that. Now, I wanted to go to high-grade copper, HG. High-grade copper is just stuck at the 2.56 area. It's in the lower range that it's been in for the last 6 months. I think there's a chance that if it takes out the low of yesterday, 2.53, it could very well go to the 2.5 to 200 period moving average and then even to the 2.5 area. So I'm watching high-grade copper really closely because I think it's showing us that internationally there's not as much strength as you would expect from the markets having gone to highs. I think the economies are not quite as good as they seem to be based on the price of the stocks themselves, of the stock indexes themselves. So the next thing I want to look at is we did that. I'm missing. Oh, I want to look at the IWM. The IWM is in fact the iShares Russell 2000 ETF trading only up 11 cents at 136.56. This is one of the weaker indices. In fact, for subscribers, we are short, and we short this and we short the Dow. And they seem to be the weaker indices. So that's the 2000, Russell 2000, the small caps. And you really want the small caps. Very often I like to see small caps lead, and they're leading to the downside here. And that's just a suggestion that there's a dichotomy between this market, a bifurcation, where the best are actually still the best and the weakest are still the weakest. And, you know, there's a rule of thumb that stocks that go to new highs tend to continue going to new highs. Stocks that go to new lows continue going to new lows. Got to watch that closely. But here's the RTH, and that is the retail, Market Vectors Retail ETF. At 82.77, it's just a hair away from the 83.10 high of the 10th of May. That was the all-time high. And when you think about this, when you think about the stocks that are just being hammered, the retail sector, Macy's, just, you know, it's devastating for the bricks and mortar companies. But wait a minute, Walmart is part of this group. Walmart is just a point or so off its all-time high. Not all-time high, I'm sorry, most recent high, May high. All-time high was back in January of 2015 at 90.97. So let's go to William in Singapore. William, how are you? Oh, William, are you there? Oh, I just saw William. William, will you call back? I'm sorry that I waited too long. I did not see your name, and I don't know if you can wait. You wanted to look at, gold. Okay, that's fine. William, I'm going to talk about gold. You come back after the break if you can, and just say, I'm back. I'll be looking at gold in a moment. Gold right now is trading up $1 at 12.67. Basil Chapman, sitting for Larry Pesavento. Trade what you see.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks, we're back. So we're looking, let me just get rid of this if you don't mind. Here we go. So the Dow is down 2. S&P is up $1.80. The comp index is up about 11 points. We're looking at the VIX index is at 10.32, down just a tad. This is going to be very interesting. So the question was from William. Oh, William is back. Hi, William. How are you?
Taking up. Oh, yes. No problem. Yes. Actually, I wanted to ask you the question regarding the gold futures.
Yes.
I think we managed to climb above 1270 up to the max of about 1274. I thought it was quite good, but since then it has been coming down and looks like it's moving sideways. And I'm thinking, what is your view at the moment? What is our chances of it going above?
So what we're looking at here is that from the low bar that was made in the continuous contract of gold, I'm looking at the continuous gold contract and probably a slightly different price than the futures.
Sure.
Excuse me. The low that was made on the 9th at 1217.6, we've gone to a leg. Oh, wait a minute. This is still a leg B. I shouldn't have done that. This is still a leg C, a leg B in the daily chart.
Okay.
So that is good. And it's walking the 9-period moving average, which has support at 1260. But for the strength of the technical picture, I'm a little surprised that gold isn't up in the 1278, 1282 area. It really should be, especially as the dollar is quite weak. So the way I'm looking at it is that this is not the big breakout for gold at this particular moment. I would not be surprised if gold has to come back, maybe test the 1250s, 1240s, and then I'd be looking to see, is it moving high? Now, what I like to see with gold, first of all, I like to see the gold stocks move up and take gold higher. For some reason, I've always preferred to see that than to see gold move higher with the gold stocks following. And very often, and you can see, let me go to gold, GG, which is really one of the very good gold stocks, just stuck. If you look at GOLD, which is GLD trading at 93.16, up 90 cents. This is Rand Gold Resources. It's so action. So my thinking here is that gold isn't quite ready to go. The fact that the dollar has pulled back should have been a trigger for gold to really push higher. And it just hasn't been able to do that. And I'd like to see the GDX actually leading. And here it is, only up 12 cents. It's kind of stuck. So I'm not looking at gold. For my subscribers, we took off a trade I wanted to put on. I don't see it just yet. I think that gold, a little later, or maybe in the summer, I think gold is going to have a bigger move. That's my thinking. And a lot depends on the dollar. And if you're looking at the dollar, William, the dollar is trading down 14 cents. it really is not showing any strength. Hasn't broken down on the daily, but the weekly looks very poor. So I'm surprised. I'm looking at the dollar and I'm looking at gold, and usually they go in opposite directions. There's just a period over the year that for 5 or 8 weeks, sometimes they can go in the same direction, not the same percentage move, but they move up together or they go down together. But most of the time they move in counterpoint. And that's exactly what we're looking at here. So we should be looking at here, and it's not happening. Do you have a position in gold?
Yes. In fact, actually, at the beginning, I have a put position on gold when I saw it coming down. That was before this present move that went up to 1270. So before that, I did put position. Unfortunately, it went down to, I think, approximately about 1245 and start reversing. So that's why, but I hasn't taken out my put position yet. It is still there because it's there about 30 days to expiration. So I was just thinking that, whether should I hang on to the put position, let it go down one more leg maybe before it reverses, upward, then I will close that, put position.
So then, all right, so then make it much easier for yourself. I would do this. Sure. The put position, if gold, even intraday, pushes above 1273.4, let's call it 1275. If it gets to the 1275 level, I think it's actually going to start to go higher. So I would have I'd have a mental stop that at 1275 I want to reassess the put position. Why? Sure. Because it's starting to make recovery highs and it's making it consistently, even if it's not very strong, it's still moving to the upside. So that's the only thing. Now, what you really want is the pattern that I'm going to draw now. I'm not sure you can see it. You want to see an arch formation. And that'll only happen if the dollar suddenly gets some strength. And the arch, meaning that you want to see the 9-period exponential moving average of 1260.80 become resistance. And that should happen within the next 2 days. And if it doesn't happen in 2 days, then the bias is just to make slightly higher highs right now. I don't see a big breakout. And I'm a little surprised because the action of the dollar should have said, hey, this is your opportunity, gold, get going. But when we pulled back that very ugly week, that candle of the week of the 5th of May, when gold went from 1275 down to 1229, that candle went too deep. And that said to me, gold is now stuck in a trading range. And that's really what I don't think you are wrong, but I don't know if you have the right trade. In other words, I don't see gold actually breaking down, but it's really not going very much higher. So I'm thinking maybe the put position isn't such the best idea. If you've got a bit of a profit, I take something off. But and the reason is that the dollar is showing no strength. If it showed a little strength today, I'd say be careful. But because the dollar is not showing any strength, it says to me gold should be much higher. It's not responding to the dollar at this point. So it's just saying gold is stuck in a range. And at this particular point, I'll give you the level. A close under 1260 says could go a little bit lower. And a 12 above the high of yesterday, 1273.4 says, oops, it could go a little higher.
Sure.
I don't know if I've helped you.
Yeah, sure. Because I was thinking initially to, add on a call position to make it as a straddle. Unfortunately, I was thinking if let's say if gold is not going to move very much higher, and if it started to move sideways, then both the call that I'm going to add on is not going to help me. Yeah, it's not going to help me. Yeah,
right.
I think
I wouldn't. William, I wouldn't. You've got your position. I wouldn't. Let the market, let gold tell you what to do next. You've got your position. Sure. If gold by the end of the day actually goes down 2 points, it's saying, that is real weakness. If it goes up even to 1269, it says, William, be a little careful because it could sort of break out if the dollar is weak tomorrow. But I don't see, at this point, it's going to, I'm surprised it hasn't moved to the 1282 area with the dollar acting like it is. But I'm not surprised based on the work that I did on that weekly candle that I said that is a really deep correction that it had. So it's just stuck. I think gold is just stuck. I hope that helps you, William.
Sure. Thank you very much, Basil. Thank you. I appreciate that.
Thank you very
so
much for calling. William in Singapore. The Dow is down 32, S&P is down $1.50. I'll be right back. Basil Chapman sitting in for what?
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So this is what I'm looking at here in the remaining few minutes that I've got. Amazon makes a new high of 1,001.20 yesterday. What I was looking for the day before, the day of, and the day after are round numbers. That's the way I work. That's one of the techniques that I developed many, many years ago, especially from the crash of 1987, where I saw all those round numbers appearing intraday. Amazing. I'll talk about it someday, but it was just incredible. Well, what we saw was on the 25th of May, Amazon opens at 995, first clue. On the 30th, it goes to an all-time high of 1,001.20. That's yesterday. So today I'm looking for a round number. And what does it do? It opens at 1,000, but this is incredible. It opens at 1,000.00. You know, someone must have put in a bid, and that was the high bid of the day. At 1,000 exact. This is very unusual. And that says to me watch out. Amazon's going to be the clue for the whole NASDAQ, the XLK, the whole area of the best. If within a week, Amazon, it could do it one more time. I don't think it's going to, but it could go one more time above 1,000. But if it is trading below 1,000, today's Wednesday, by Monday, Amazon has put in a short-term top. And that's going to impact the other markets. That's the way I look at it. I make it real simple. And it's at 992.64 right now. So I'm watching it very closely. My contention is, and this is what I've been telling subscribers, we're saying in our short positions, we didn't add to it today. I wanted to add to it. I just didn't for a couple of reasons. I said, you know what? I don't mind waiting for a turn in the market. We'll see what happens. But I'm suspecting we're getting closer and closer to a pretty darn good pullback in the best of the best. Hey, best of the best will be here with us tomorrow. That's Larry Pesavento. Stay tuned for a great program, Tom and Tommy, and we've got a program. I'll be back at 11 o'clock. My Tiger Technicians Hour. Great program all day. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.